Dubravko Lakos, JPMorgan's head of global market strategy, joins us now. It's good to see you. Welcome back.
Thank you, Scott.
You did raise your target, but it's to 6,000. We're already there. So you think the next 6 months are going to bring us what?
Well, look, if you looked at the details of our last 2-3 reports, we've actually been pushing the bullish tactical trade since the end of April. And, the 6,000, year-end price target for us is really more a view that the market from here on is likely going to be range-bound. If I had to sort of cut that up, I would probably say that in the very, very short term, the upside trade or the upside squeeze likely continues to persist. But then I think you have to start, worrying about the fact that tariff volatility could pick up as you go into July. And I think there's a risk that future payroll numbers take a hit, given some of the sort of changes that have happened on the policy side earlier this year. And so that could then induce another growth scare. And then after that, we need to see how basically the Fed responds, which I think, we could see a situation where the Fed perhaps also goes a bit sooner than expected. And then that basically sets us up for, again, a more bullish backdrop in the back end of the year. So range bound broadly, with maybe still some further room for upside in the very, very short term.
So the bulls, I don't want to paint you as a bear because you're not, but the bulls who say you really need to lean in here make the case of, look at what just happened with the mega caps and earnings. They justified all of the belief in this super cycle. Look at what's happening on the Hill with the administration. They don't want the story to unravel. They say, well, we know what the president's going to do at the end of the day on the tariffs. That's bullish, because he's not going to put his foot all the way to the floor, because they learned their lesson one time already. The taxes are going to get done. You're finally going to get M&A. And have you seen what's happening with the IPO market? It's going crazy, the ones that have listed in the last week or so. Now, the sample size is obviously small, but that would just tell you there's a lot of pent-up demand that's going to come to this market. And then, oh, by the way, the Fed's going to cut also. If there's even a sniff of labor market unravel, they're going to come to the rescue too. So it's hard to be bearish in that environment.
I would not be bearish, but I do think there will be, various pockets of volatility that we'll have to digest in the coming period, and thus I would probably be then looking for that weakness to then reload back into the market, given that we've had already such a strong run. So our conviction level at the market right now here, I wouldn't say is that high. Where I would be actually placing the conviction is really more in the long-short momentum trade, which we have also been sort of pushing quite heavily, and that is basically staying long the broader AI complex, the big tech complex, data center complex. That's the area that we think continues to outperform on a relative basis.
That's the thing. Like, if that does outperform, then that theoretically takes the S&P 500 into uncharted territory, correct? So that's reason enough, if you're in the right stocks and leaning in the right area, to think that 6,000 looks light on the S&P if that trade continues to work, even if some other areas don't.
I agree with that. But again, as I mentioned earlier, I think we need to be very open to the fact that we could take a payroll hit at some point in the coming months. And so let's say if early July you get a negative NFP, I do think that the market could go through a short-term growth scare, and you could have a relatively easy sort of flush unwind. And then I would most likely look to lean against that and make another sort of upside case for the market.
And you don't think we already had that, right? Because I feel like we already went through one of these growth scares already, and then we realized, wow, you know what? The economy's more resilient than we thought, again. The consumer is more resilient than we thought, again. And earnings turned out to be way better than we thought they'd be, again.
Yes, we did. We did have a pretty, I would say, big shock that we basically faced. I don't think we're going to face anything similar in terms of magnitude, but nonetheless, given that things have sort of run up and have the potential to keep running up in the course of the next week or two, I do think you probably want to sort of take a slightly more conservative view as you go into July, and then look to sort of replay the bullish thesis a bit later on. So that's why I would sort of make a little bit more of this like range-bound call around the 6,000 level.
Mm-hmm. Looks to me like you're back at HQ or one of the offices on the trading floor, but you were at the quantitative conference that JPMorgan was having, which was all about AI, right? So this was right front and center for you in terms of where the action remains.
I mean, no, this completely reinforces the theme for us. Yes, we're literally in the midst of our JPMorgan Research Quant AI conference. AI LLM is really at the center in terms of the topic. Huge interest, record attendance, and this is an area that I think remains very exciting, and we're going to continue to see a lot of new developments and sort of applications, even for the world of investing, over the coming quarters. And so it's something that we continue to focus on quite heavily, both within research as well as JPMorgan more broadly.